John, what does this partnership mean for the Southeast Asian startups that chose to list on the US exchanges, put their primary listing there? Does this alliance perhaps create a pathway for a homecoming, for a secondary listing?
Well, that is one option. First of all, there are a tremendous number of exciting companies coming out of Southeast Asia. When we talk to investors around the world, the geography that they're saying they are most focused on, or among the geographies they are most focused on, is Southeast Asia. You see a lot of global capital flows coming to the region. And as the Singapore Exchange continues its development, as the U.S. markets continue their evolution and development, we want to provide as many opportunities as possible to those issuers with the least amount of friction. So in our discussions with SGX, we're going to be looking forward to creating a glide path for many of those Southeast Asian companies that could be listed on the New York Stock Exchange or outside of Singapore to be able to be listed on their local market as well and get those benefits of having access for local investors and global investors.
John, give us your take on sentiment, and we can blame market conditions, but is 2022 looking like a very different year for IPO activity compared to the blockbuster 2021 and the record issues that we had last year? Do you have any insight into the pipeline and when that pause button can be released and we'll see activity coming back?
Well, you're right. The first half of 2022 is very different than the preceding years. If we take a look back at the New York Stock Exchange, 2020 was a record year, 2021 was a record year, and we've seen a significant slowdown in new equity issuance. And there's a number of factors that are driving it. One is market volatility, and that's caused by macroeconomic factors, so uncertainty around the size, timing, and frequency of the Federal Reserve's rate increases and other central banks around the world, how they are going to respond to current market conditions, how they're going to tackle inflation, how inflation is impacting companies' financial statements and performance and earnings. The second piece is geopolitical volatility, whether that be caused by supply chain disruptions or the war in Ukraine, and how is that impacting companies' cost structures as well. And then the third piece is just an overall sentiment shift from many institutional investors out of growth at all costs. Top line growth was their primary focus, to looking more at profitability, earnings per share, free cash flow, EBITDA. And so with that sentiment shift, we've seen a downturn in many sectors' valuations. Not all sectors, but many sectors. So companies are now assessing how, when, and at what valuation they want to go public.
Right.